I don't think there will be any surprises because currently the system is that the new person will also be one of the 4 MDs who are currently in office in the bank. They also have been lifers with the bank as I have been, and they've been part and parcel of all the decisions that I have taken. So I don't think any surprises are expected when they take over. We've been extra careful about this in order to assure the market that whatever is being done is the right thing. I don't believe there will be any such issues when the new person takes over.
Well, more broadly, the RBI, the Reserve Bank of India, India's central bank, has come out with rules that are going to restrict weaker banks from lending and opening new branches. Many of India's banks are struggling with very high bad asset ratios. How is this going to affect the banking system, and what is it going to mean in terms of market share? Some are saying it might shift it more towards private banks now. Explain just a little bit more about this new rule and how it's going to affect banks' profitability and more.
See, what has happened in India is something that has happened in many countries across the world. While many of the macroeconomic indicators in India are perfectly in order and they point towards greater growth in the future, but it is a fact that there are certain systemic issues that have led to quite a bit of corporate non-performing assets in the Indian economy. Now, in such a case, everywhere across the world, the government, the regulators, the banks and industry have come together in order to resolve the issue. I think the same is being thought about in India right now. As you know, yesterday the finance minister indicated that they would probably be coming with the ordinance to empower the regulator to take more action in order to resolve these bad assets. I think the moment these resolutions happen, you will see that there will be a positive turnaround in the banking system, plus the credit growth. One good thing about the NPA cycle in India this year, or rather this time,
the non-performing assets, yes.
Yes, the non-performing asset cycle in India this time round is the fact that many of these non-performing assets are actually working assets, and the assets that have been created, whether they be things like steel plants or power plants or roads or ports or whatever, many of these are actually very good quality and also required by the economy. And therefore, as you see the growth numbers pick up, many of these will actually turn performing. So that, I think, is one of the better things of the NPA cycle this time.